This is Robert Dumas from Tax Connects. Welcome back to our discussion of the 5-step process to sales tax compliance. As I mentioned in the previous video, the first step to determine if you are in compliance from a sales tax perspective is identifying where you have nexus. Well, what does nexus mean? Nexus literally means a connection or link. Consequently, nexus is the connection or link that your business has to a particular state. States constitutionally cannot impose their laws, specifically their sales tax collection laws, on you as a business if you don't have sufficient nexus in their state. Consequently, this is the first and most critical decision you have to make relative to our 5-step sales tax compliance process. Generally, nexus is something physical, like an employee or an office. That's very easy, very clean. Most of us can understand it. However, there are nuances in physical presence relative to the depth and breadth of that physical presence for your business that make the nexus determination a little more complicated. First, the Supreme Court in 2 landmark cases, National Bellis Hess and Quill, established physical presence as the nexus standard. However, all states have codified their interpretation of nexus, and you have to comply with the nexus requirements of each state individually. So let's go and talk about what nexus means. As I said before, physical presence is an employee. I don't think there's a lot of gray area with employees. Gray area comes, however, when you use contract labor. Contract labor in certain cases can be equivalent to a physical presence employee. Same with leased or purchased offices. Even if you lease an office, you have nexus. You don't have to own the property in a particular state. Also, if you ship into a state your goods using your trucks rather than a common carrier, you're establishing nexus. Your name is all over that truck and you're advertising in that state, creating nexus. If you ship goods into a state and then subsequently send reps, either employees or contractors, into that state to install, repair, or maintain those goods, you're probably establishing nexus. One area of particular confusion and surprise for technology companies specifically is trade shows. You sending your sales team and some of your technical reps to a trade show can potentially create nexus in some states. It all depends, again, on breadth and depth, the number of times you go into that state in any given year for those trade shows. It also depends on the state. Some states say 2 days for a trade show is sufficient for nexus. Other states will say 15 days. So you have to be very careful and know what's going on in your business to determine whether your trade show activity will create nexus as well. The other thing to note is nexus is determined and established at the entity level. You may have 5 or 6 lines of business under one legal entity, each line of business with a separate business model, separate sales channel that don't even seem to interrelate. But the nexus established in any one of those business models or business units is going to impact nexus for the other business units as well. So be sure you keep that in mind as you're determining nexus for your business. The other thing I want to clarify for you is sales tax nexus is going to be different than income tax nexus. It's a much more stringent standard to establish income tax nexus. So don't worry that establishing sales tax nexus is potentially going or will definitely create income tax nexus, because it may not. Okay, I think we've given you enough information at this point to complete step 1 for yourselves. Does your business have nexus, and where do they have nexus? Join us for our next video where we're talking about taxability of your products and services.